If you're a U.S. business owner making good money, and every year you write a massive check to the IRS and think, that can't be right, this episode's for you. Because if you're doing everything your CPA told you to, and you're still overpaying tens of thousands in taxes, the problem isn't your income, it's your structure. Now, today, we're breaking down the legal strategies and smart business owners use not to hide their money, but to stop giving away the money that they don't legally owe. Now, today, I'd like to welcome a special guest to our show, and his name is Sebastian, and he works with U.S. business owners to fix structural mistakes that quietly cost them 10,000 to 50,000 to even six figures a year, all while staying completely legal and compliant. Sebastian, welcome to the show. I'm so excited to have you here today.
Thank you, Stacey. I'm really excited to be here. You bring a lot of energy to the show and looking forward to this conversation.
I'm looking forward to it too. Now, let's start with the big picture. Why are so many successful U.S. business owners still overpaying taxes even when they have a CPA?
I think it really comes down to when they see their accountant. Too often business owners think about taxes as an afterthought, and they might not go to their CPA until tax filing time. And unfortunately, it's at that point, it's really too late to be able to take advantage of any tax strategies that might exist. What I recommend business owners do is meet with their CPA, usually in the fall before year end at a minimum, but more ideally at least quarterly, just to have those touch points throughout the year where you really talk through kind of where the business is at and what type of taxes the owner can expect come year end. So at least if you meet in the fall, maybe you're contemplating a big purchase or maybe there's a need to restructure the business. I think at that point in time, if you meet with your CPA, you're able to think through stuff like that and do what's possible to mitigate taxes before year end.
I like that. Now, so if you're making more money but feeling squeezed, it's not because taxes are just high, it's because most people never update their structure as they go. Now, is that true?
Yeah, absolutely. A lot of business owners usually start off as sole proprietorships or LLCs, which is great. It's a flexible way to start your business. But then as the business grows, there usually comes a point where it might make sense to do what's called make an S-Corp election, where you're changing the way the IRS views your business from an entity perspective. And the benefit there is normally as an LLC, a business owner would pay themselves just through distributions, where they're basically transferring money from their business bank account to their personal account. But once you make an S-Corp election, you're now able to make yourself an employee of the business and pay yourself what's called reasonable compensation. And that's an extra expense that you can deduct off your business income that you otherwise weren't able to. So basically, if you're making 200K profit and you pay yourself a 100K reasonable comp, now you're only paying tax on 100K profit instead of 200K. And the real savings there comes down to self-employment taxes, where with the typical LLC, if you didn't have the S corp election, you would pay self-employment tax on the full 200K profit. But with the S corp, you would only pay self-employment tax on your 100K salary. So you're saving 15% of the 100K. That's not your salary. So it could result in a pretty big, tax deduction and tax savings for the business owner. So I think entity selection is really important, and constantly reviewing it with a professional like a CPA is something I highly recommend.
I agree. Now, how does something like the Augusta Rule combined with the S-Corp immediately save businesses, owners about 10,000 or more? And why do so many people, not know about this?
Yeah, so Augusta Rule is actually it's a really good tax strategy for someone who owns a business like an S Corp. And basically, what you do there is you rent your personal home to your business,
Hmm.
which is basically an income shifting strategy because you're able to deduct that rent expense on your business tax return, but you don't have to claim the rental income on your individual return as long as you're renting it for 14 days or less. So it's kind of one of those things where you're showing an expense on the business side, but don't have to show the income on the personal side. So it's just a way to lower your taxable income and pay less taxes. Now, I want to make your listeners aware that it's not as easy as it sounds. Like there is some key documentation that's needed. Like you got to have a real business reason for why you're renting your primary residence to your business. Maybe you're hosting quarterly meetings there with your staff or board of directors meetings, or maybe you're doing networking events or there, something like that. It needs to be clearly documented, as well as when determining the rental rate, you should use like a third party source like a Street Easy or any other website that kind of verifies what like a normal hourly rate would be, or even like a daily rate would be for renting out your home.
Oh, wow. Now, who should be looking at this right now and who shouldn't be looking at this right now?
I would say anyone that has a business that has can has a legitimate reason for using it that can
Mhm.
be defended. It could be a good opportunity for you to save money on taxes as long as you're executing it appropriately. But it's really easy for the IRS to sniff out those that are just using it for tax reasons. So the business justification, I think, is crucial.
Now, let's talk about, hiring your kids. Like, why do parents think that it's risky or shady, and why is that belief wrong?
Yeah, so hiring your kids is another great tax mitigation strategy. And it's a good way for you to get your children involved in your business and maybe teach them some skills that are gonna, pay them dividends throughout their life and career. It's another one of those income shifting strategies where on the business side, you're able to, show an expense for paying your children, but on the your children don't have to pay tax on the income as long as it's up to the standard deduction for the year, which is around 15K. So it's, you kind of get there's multiple benefits there where, you're showing an extra expense on the business side, your children doesn't have to pay the income tax, and you're also teaching them some valuable skills and getting them immersed in your business, which could be helpful and could even help with succession planning, which is a big problem in the small business world nowadays. Is that there's a lot of business owners that don't have anyone to either buy their business, or their children don't want to take it over. By getting them involved in it, maybe they would one day take over the business. So it could be beneficial there for you long term.
I agree. There's a lot of people who don't want to get involved in their parents' business, but once they actually get a taste of what it's like, wow, it's not so bad, and they see areas that they actually have, a liking to that they want to actually focus on.
Exactly. And another thing people do too is instead of actually paying their kids the money, they invest it in a retirement account that, that grows every year. And then, when they turn 18, 20 or older and they look at their retirement account, it's a nice big number, and it all comes down to their parents planning ahead accordingly.
Right. Now, when done correctly, what does this actually allow families to do financially?
Yeah, so it's just like I said before, it's a great way to get your children involved in the business. It teaches them what it's like to go to work and make money. And if they are putting it into their retirement account, it sets them up nicely for their future. Could be used for, paying their college tuition one day or starting a business, anything like that.
That's amazing. And now, why does real estate play such a big role in tax strategy for business owners? And how does a bonus depreciation, change the game?
Yeah, so everyone always talks about the benefits of owning real estate, but I feel like not many people really know why. And I think the
Yeah.
reason for the tax benefits of real estate really come down to depreciation. It's a really powerful tool to shield earnings and to lower your taxable income. With the new big beautiful bill, they made bonus depreciation back to 100%, which means you can write off 100% of certain assets. When it comes to real estate, it's important for your listeners to understand that normally real estate activity is what's called passive activity. So which is in a different bucket than someone's W-2 or business income, which would be non-passive. If someone buys like a long-term rental, it's a passive activity. And if they're showing losses on it by using bonus depreciation to show like a big paper loss, they're not going to get the benefit on the W-2 side because they're in separate buckets. However, one way to get around that issue is to invest in what's called a short-term rental loophole, which is investing in an Airbnb, where the IRS actually looks at Airbnbs as a business. And so it's in an entirely different bucket. It's back in your non-passive bucket. So you can use any losses from an Airbnb to offset your W-2 income. And this is one of the biggest tax strategies I think a high income W-2 earner can do. Just to put some numbers in perspective for you, if someone buys an Airbnb for like 500,000, they can expect a $100,000 tax deduction in that first year of ownership, assuming they
Wow.
manage the property and they do what's called a cost seg study on the property and couple that with bonus depreciation, they can drive a really big year one paper loss. That could result in, not only lower taxes, but even a tax refund if they were paying withholding tax through their employer. They could have overpaid throughout the year, given that they have a big tax deduction when it comes down to filing their taxes. And then what people do is they use that refund to go as a down payment for their next property in the next year, and they do the same thing every year. So it's
Yeah.
one of those things that can be rinsed and repeated, and it's a great way to build your real estate portfolio.
That's amazing. I know so many people that are so interested in real estate. They just don't know a lot about it. And, that's a great way to actually start getting involved in real estate and actually start making a lot of profit very quickly.
Oh yeah, absolutely. I mean, especially with short-term rentals, usually the cash flow with them is a lot better than long-term rentals. So you're able to, put some more money in your pocket there. It's a great way to, real estate has always been one of the best ways to build your wealth. So I highly advise your listeners trying to take advantage of that if they can.
I like that. Now, what's the biggest mistake you see people make when they try to use real estate for tax relief?
Yeah, so like I was saying before, it's just not understanding the fact that some real estate activity is passive and others not is non-passive. So,
Yeah,
I have clients that come to me with long-term rental portfolios and they're saying, "How come I'm not getting any tax benefits from this?" And it's because they're not what's called a real estate professional, which means any
mhm,
of their long-term or even mid-term real estate activity is passive and it kind of gets locked away in a different bucket.
gotcha.
They don't lose it. They just are not able to use it in the short term. They end up using any losses that they build up to offset future income from the property, or even when they go to sell the property, they'll pay less capital gains tax on it. So it's
Hmm.
not really lost. But I think just being aware of the passive versus non-passive rules, I think would separate a lot of real estate investors from the beginners.
Now, at what income level does the conversation shift from nice to know to you're leaving money on the table?
Yeah, so I mean, just looking at business owners that might have started off as an LLC, I would say once you're around like the $60,000 profit amount for the year, that's when they should really start thinking about whether an S-Corp makes sense for them. And that, just based on the math that we do, that's what we see our customers really benefiting from the S-Corp. So I would say once you hit that threshold is when it really makes sense.
Now, what changes for business owners emotionally once their tax strategy finally matches their success?
Yeah, so I think a lot of people want to save money on taxes, but they don't really know how. And they might go to, and this comes back to what we were saying before, they might go to their CPA too late in the game to really do anything. So I
Yeah,
think the more that people are proactive and meet with their accountant regularly throughout the year, the more comfortable they'll be with tax filing because they would have been planning for it the whole year. And
right.
no one likes to file their taxes and get surprised with a big tax bill. So the more you stay on top of it, the better, I'd say.
Now, if someone was listening and feels frustrated every tax season and thinks, oh, there has to be a better way, what's, one thing you would want to tell them that they need to understand?
Yeah, so with tax planning, I would say it all comes down to really having really good clean bookkeeping, right? Bookkeeping is
Mhm.
the foundation of every business. It's the foundation of all decision making. And it's really tough to do tax planning without having good, clean, accurate books because we don't know where you are with your profit,
Right.
right? So, I think getting the small things right, like always, keeping your books up to date, accurate, clean, serves as a really strong foundation for tax planning. And then meeting with your accountant more than just once a year, I think would help a lot with business owners and not facing any surprises.
I like that. Now, if there's three key things that you really want people to understand about taxes and filing their taxes and some of the strategies and key points that they need to really, understand and focus on, what are some things you'd like people to, remember from this conversation that will help them?
Yeah, so I just want to clear up something that I think a lot of business owners get wrong too, is that just because you can extend your tax return filing doesn't mean you can extend any taxes that you might have due. So
Hmm.
too often business owners come to me around March or April and they're like, I don't have the money to pay this tax, so let's extend. But that's not really how it works. So
Yeah.
you can extend the filing, but you can't extend payment. So I just want your listeners to be aware of that. So that's one thing. Another thing is, like I said before, tax planning should be a year-round exercise, not a last-minute scare. So just meeting with your accountant, more often than once a year, I think is crucial. And also bookkeeping, right? Like having the books in order, kept up to date and clean is important. Some business owners choose to do it themselves. While they might save money doing that, they usually end up not keeping them up to date in time. Number one or number two, not doing them accurately. You don't know what you don't know type of thing. So
Yeah,
I always advise consulting with a professional to get stuff like that done.
I agree. Now, can you tell us a little bit about the services that you provide?
Yeah, so at Seb CFO, we do bookkeeping, tax, and CFO services to small businesses. From a bookkeeping perspective, we help business owners manage their QuickBooks, whether that's setting it up or managing it on a monthly basis, categorizing transactions, reconciling them, and making sure the books are kept up to date and in order. We also share the financials monthly and hop on a call with the business owners to talk through the numbers or anything top of mind. The way we like to operate is really serve as an advisor to our clients. So it's more than just sending you the numbers and having you figure it out on your own. We like to meet with our clients at a minimum on a monthly basis. From a
Yeah,
tax perspective, we offer, year-round tax planning. We eat our own pudding too, in that we never give tax plans without filing them too. So we offer tax filing services. A lot of tax firms, or a lot of accounting firms rather, would lead with tax filing first, and tax planning is like an afterthought. For us,
right.
we've entirely flipped that on its head. We lead with tax planning. That's like the number one thing we focus on, and tax filing is just an afterthought for us, where we execute everything we talked about all year. And from a CFO perspective, we help with budgets, projections, investor presentations, any type of custom analysis to help business owners, one, understand where their business is at and where they want to go, and help them reach that level.
And where can people get in touch with you?
Yeah, so if anyone's interested in getting in touch with us, we could be found at sebcfo.com. If you check on our website, there's a button to book a call. We offer free consultations, and they're by no means sales calls. They're more of just a way for us to get to know each other, just hear what you have going on, see if there's a fit for us to work together. At a minimum, usually people leave those conversations with a tidbit or two that they could bring back to their business and hopefully, add value to them.
I think this has been an amazing conversation. I really enjoyed that you came on the show to really share some of this information. I think it's so important, that people understand more about taxes and more, like a lot of people, not everybody's a numbers person. So, they start seeing numbers and they start going cross-eyed. It's just, and then they think about taxes, paying money, this and that, and filing and all the responsibilities that come with it. And they just get stressed out before before they even start the process. But if they break it down and and they listen to some of the strategies and tools that you provide, I think it could be a very easy process as long as you have a nice organized strategy that you go accordingly to, and it doesn't have to be something that takes a lot of your time. It could just, you could take, a little bit of your time each week and just make sure certain things are aligned, or, you just do, one or two things a day, and, just, make sure that certain things are implemented and so forth, just so, when the tax time does come, you know what's going on. Because a lot of people, believe it or not, in businesses, they don't really know a lot of times what's going on, and numbers is everything, so
Yep.
it's like it controls every part of the business, so it's a really important factor that people have to really understand the numbers and what's going on in their company. And and tax, like CPAs and accounting firms could really help them with that, and so they don't lose track of their profits and losses. Because I think that's one thing that we could talk about, maybe if you want to come back on the show, we could talk about too, is that not even just, filing taxes and keeping everything together, but a lot of times people don't realize that they're losing money during the year, and they don't even
Yep.
understand where it's coming from and why, and, changes they can make to actually save themselves from losing money, and, and actually doing better than they actually could have done.
Yeah, absolutely. And I would love to come back on the show to talk through that. But just building off your points, not everyone has a finance or accounting background. And a lot of business owners, we always say, don't waste time learning QuickBooks, right?
Yeah.
Something like that, you should outsource to someone. Your time is way better spent trying to get sales, growing the business, hiring people, doing the part of business that you probably love and enjoy.
Yeah.
Not everyone needs to be the bookkeeper or accountant, and I wouldn't be like, reading about tax laws and stuff. Outsource that to a specialist, and I think that's the better way to spend your time.
Oh yeah, for sure. Well, Sebastian, this was an incredible, podcast. I love how you clarified everything, made it very easy for everybody to understand. And I really, like I said earlier, I really enjoyed our time together, and I look forward for you to come back on the show. And thank you so much for, your time today. I really appreciate you.
Yeah, thank you so much, Stacey. Really happy to be on the show. Hopefully, your listeners left with something valuable. And I would like to offer a special offer to your listeners where if anyone goes on my website, sebcfo.com, and books a call, we're offering a free review of your prior year tax return. Just mention the show, and with that review, usually, we review it for any errors, missed deductions, or missed credits, and sometimes it can result in the need for an amendment, which could result in a tax refund to you. So it's kind of one of those things where there's found money. So I highly encourage your listeners to take advantage of that offer.
Oh, wow, that's great. I might take advantage of that offer.
You can, absolutely.
I love it. Well, thank you so much, Sebastian. I look forward to seeing you soon. And thank you so much for all this great knowledge that you shared today.
Thank you for having me, Stacey. Thank you.
You're welcome.